Well, it's St. Patrick's Day, and we are now 3 weeks into a war in the Middle East. What does all this mean for investors? Well, I think the thing that people have to remember more than anything else is that this is likely to be something that has ramifications that last for months, even if the problem is solved immediately. Here's what I mean. The Strait of Hormuz has been closed. And despite all of Donald Trump's efforts to get other allies to assist him in opening it, no one seems to be biting, and there's a real question as to whether or not the Americans have the resolve to attempt to send any ships through the strait. As a result, we're looking at a situation right now where the flow of oil is severely constrained, and many, many experts have already said that even if the flow of oil were to resume immediately, the impact in terms of getting things back to normal, getting prices back to normal, fixing the infrastructure that's been destroyed along the strait, that helps oil get to market, and resuming supply chains that have been disrupted already will take months, literally months. So the price of oil will stay elevated for the foreseeable future, no matter what happens. But here's the thing. Virtually every major market downturn in the past 50 years has been predicated by a spike in oil prices. Certainly what happened in 1974 and 1979 are the most obvious examples. They're examples of stagflation and recession starting and inflation being high because of oil prices being high. Now, I'm not saying it will be an exact repeat of what we saw 50 some odd years ago, but I do think that there are a number of similarities that if you're trying to make better wealth decisions, you would be foolish to think that things might not work out in a similar fashion. So think about what you're doing with your portfolio now. Think about how things went in the 1970s, what did well, what did less well. Spoiler alert, it wasn't a good decade for stocks. And think about what you can do to maintain a balanced portfolio, to maintain calm, but to also proactively make adjustments now in consideration of what seems to be a very strong likelihood of higher inflation and disrupted supply chains and higher energy prices for probably at a minimum the remainder of 2026. What you do is up to you, but it's important that you at least give consideration to what your options are now at the onset of the crisis before it worsens, while you can still do some good. Good luck out there. This has been Weekly Wealth Update, a Make Better Wealth Decisions podcast dedicated to explaining how current events impact your portfolio and the wealth decisions you make. Tune in for commentary on how the news of the week affects your portfolio and your thinking.